Peter Van Der Welle, strategist, sustainable multi-asset solution in Robeco. Good morning.
Good morning.
Are you concerned about the downgrade of US debt that we saw last Friday?
Well, Moody's was not the first credit rating agency to downgrade US debt. The first agency was S&P back in 2011. So in that sense, it is not a shock. However, it is a confirmation that the US debt trajectory is taking a path that might not be sustainable, and I think that's also again confirmed by this downgrade.
The levels of the US 10-year that investors should be watching, 5%, 6%?
I think for a true expression of market concern about debt sustainability in the US, you would see 10-year US well above 5%.
What do you think a conservative investor should do in this stock market environmental with a volatile market?
Yeah, so this is a market that remains highly unpredictable, given that if you look at the market pricing, tariffs are a very large chunk of the underlying or expressed volatility, and we just simply don't know how the Xi President Xi from China and Trump's talks will evolve in coming months. They are talking now, but the concrete outcomes are very difficult to predict, as well as the repercussions in terms of US economic growth. I think a recession at this point in time for the US is almost a flip of the coin. We do have a 45% US recession probability, with our base case still seeing that resilience of the US economy still persisting, narrowly avoiding that recession. But it's very difficult to navigate geopolitics at this point in time, also given what's going on in Russia and Ukrainian talks. So how to navigate this? We like more conservative approaches to our asset allocation. We have been buying gold earlier in April and also in March. We do think that also conservative equities, so equities that have a more value tilt and also benefit from a high or have a better performance relative to other equities in a high volatility environment, that these low volatility characteristics are beneficial, as well as also quality stocks. So pricing power is going to be pivotal, as this tariff shock will emanate through the economic system. So some companies are able to pass through these higher input costs on the back of tariffs, but some other countries and corporates are not able to do that. So pricing power will be rewarded by the market, and quality stocks are likely a segment of the market that can be more resilient.
Is it a good time to buy debt now in the market?
So we are neutral on duration at this point in time, and things could go either way. So if you look at sentiment data, they are really bearish, both consumers as well as producers. So if things start to roll downhill from this point in time, with US unemployment trending upwards, that could create, of course, a rush towards safe havens, and maybe also again towards US 10 years. On the other hand, if US economy remains resilient, if the Fed needs to be patient and can't cut rates further, if we do see a pickup on the back of these tariffs in inflation of 1%, as is quite plausible, with a US inflation running above 3%, it's not wise to enter now big long duration positions. So things could really go either way here. So for now we remain cautious with a neutral stance on duration.
In equities, it's time to come back to the US?
Yeah, so you have seen that US exceptionalism has been revisited over the last couple of days. That's well, the AI theme is still very strong. The fact that there is now that 90-day pause on tariffs that has of course given some leeway for US equities again. You saw also that the dollar strengthened again. But if you look now at the fact that the 30-year US Treasury rate is now again close to 5%, which was also the risk-off signal in early April, yeah, I think you should be cautious by chasing this market and buying equities right now. Also, if you look at the prospect of an inflationary shock versus the level of the US equity valuations, US equities are still very expensive, also relative to the expected level of inflation that we do envisage. And if long rates stay elevated, I think that will still pose a headwind for US equities, despite decent earnings growth from the Magnificent Seven.
Thank you very much for all this picture. Peter Van Der Welle, Strategy Sustainable Multi-Asset Solutions, Robeco. Good day, good business.
Thank you.
Thank you very much.